New regulations are starting to trickle into the world of e-commerce and e-trading from the G20 meeting back in 2008. Now, for the average consumer, this may be of no concern when they opt to buy something online, for instance. But for businesses and especially financial institutions, it's slightly different. Well, on the line to help shed a bit more light on this is Stephane Malrait, who's the global head of e-commerce at Societe Generale in London. Thanks for joining me today, Stephane. Now, for those of us not too familiar with the terms e-commerce or e-trading, it is essentially the practice of buying or selling online, isn't it?
Yes, that's correct. It's not only the internet, but it's the electronification of what people used to do over the phone to be able to do financial transaction over electronic media. It can be the internet, can be a terminal, a dedicated terminal platform.
Now, what are some of the advantages in utilizing e-trading and e-commerce?
So one of the advantages is that you are in control of what you execute, and you execute it exactly at the time you want to do it. You have a very good idea of what is the level of execution that you do, because you see the price in real time on your screen. So it's very clear what you do when you do it. The disadvantage of doing it is probably compared to when you used to talk to your broker or your salesperson on the voice at the bank, is you don't have as much market color. So if you need some market advice, you have to do it yourself. You have to research a lot more. So it's always a balance to make sure that you continue to have this relationship as you used to have, but you increase the execution level because you are in control of what you execute and when you execute it.
Are there any disadvantages with this system, though?
No, I think there's not many disadvantages. I think it works very well for certain type of clients and population in our case. For all the smaller trades that we execute with our clients, they put those trades mainly electronic now. For much larger trades, because they want to make sure that they are not going to impact the market too much, they prefer to stay on voice and talk to a person to make sure the trades are much bigger trades are going to do make sense and will not impact too much the pricing of the market, or to have some market color and market advice before they do the transaction.
Now, new regulations are being implemented in e-commerce and e-trading, most noticeably the US Dodd-Frank Act. This is due to hit the US first and then Europe. Could you tell us about this new regulation and what the impact could be for Europe and the US?
Yes, so the first one to go in effect is the Dodd-Frank Act in the U.S., and in fact the executive date to launch about this regulation was last Friday, October 12, 2012. This is coming from a G20 requirement meeting that happened in 2008 because of the financial crisis, to include more transparency in the market and to be able to reduce the systematic risk from larger banks. This regulation is implementing first in the US. It's going to be then implemented in Europe with a MiFID implementation and MiFIR as well. We are looking towards starting that mid-2013 and 2014 for Europe. The impact for us will be for financial institution mainly because of the change of clearing of derivative products. There will be a cost associated to the clearing of the derivative product. There will be some trade reporting activity as well that we didn't used to do on those derivative contracts. And there will be some electronic execution will be enforced as well by the regulator. The change impact currently for European, even if the European regulation is not live yet, is that if you deal with an American institution, or what they call a U.S. person with the classification of the regulator, you will have to comply to the U.S. regulation for those derivative products who are in scope. even if you are based in Europe. So for a European person who is going to deal, for example, with a European institution, you can still trade as you do today for those derivative products until the European law is in place in 2013 or 2014. But before that, if you deal with a US person or the US entity, you may have an impact because the trade will need to be reported to a central repository, because you may have to clear the trade on a central venue, a clearing house, and also you may have to execute these trades on what they call a SEF, a swaps execution facility.
Will the market be affected by any further regulations, Stephane? And if so, who's going to come out on top at the end of it all?
It's very early stage to say what we are going to gain or not. I think some of the impact in terms of clearing of derivative contracts will help the market as a whole, and this is well perceived by all members of the industry. The reporting activities and real-time execution on electronic platform for some contracts will be a challenge for certain type of instruments, because those instruments are not very liquid on the market, and as soon as if you put too much transparency in these instruments, you may risk to impact the market, and some of the clients want to be able to execute large transactions without impacting too much the market. So it's quite early stage yet to say who will come at the top. I think from my point of view, there will be a niche opportunity we are going to develop in different jurisdiction or client segment for certain products, and maybe those are going to be the ones who do the best and survive, because they are going to find those opportunities, develop a market with be able to grow in those new regulations and be able to stick with them. I don't think there will be the supremacy of a global players who are going to take over the entire market because of those change of regulation.
Okay, thanks for that. Some interesting points there on e-commerce as it stands today. That's all from me for now. Do stay tuned throughout the day for the latest financial updates here on Dukascopy TV. But for now, goodbye.